If you've ever heard somebody say that higher taxes on corporations and the wealthy kills jobs and limits spending and hurts the economy, that person is stupid, and you should never listen to anything they have to say, ever. In fact, not only does higher top tax rates not kill jobs and stifle spending, it creates jobs and promotes spending. Irony is that everybody who wants to make America great again doesn't want to bring back the 90% top marginal tax rates from when America was great. But I'll get into the stats and history on my inconsistent miniseries, Everybody Hates Reagan, because like everything else, the absence of logic on how the tax system works and the economic and social damages of low tax rates are, of course, Reagan's fault. But I think a big picture concept video on why lower taxes actually kills jobs and stifles spending and hurts the economy, and why higher taxes creates jobs and stimulates spending is important. I understand why people get confused on this topic when they look at it from a personal experience. Because for most of us lowly peasants, we get our W-2s or our 1099s, and we look at our income and we remove our standard deduction, and then we pay our 20-something% on the rest of that income. So when you hear that we should raise the marginal tax rate on top earners to 50, 70, 90%, that sounds insane, because if we apply it to if we were paying that, that means that we would be paying that much percentage of our income to the government. And that does seem pretty ridiculous from pretty much anybody's perspective. If we're being honest, 50% even for us mere peasants isn't that ridiculous if we had things like, universal health care and free college tuition and paid maternity leave and free child care and decent roads to drive on and robust public transportation. But since we don't have any of those things, it is absolutely asinine to think about paying half of our income to the government. What a lot of people don't understand is that rich people don't live in the same reality as we do, and this really applies to how they do their taxes. See, rich people aren't logging into TurboTax, checking off standard deduction, and then paying their 30-something% on their millions or billions of earned income. First off, a lot of wealthy and corporate income isn't earned in the same way ours is, or at all, because while they do earn some of their money in the form of a paycheck or receipts from doing business, they also get paid in a lot of ways that aren't taxable, like stock options. Elon Musk is so wealthy not because he has all that cash in the bank, but because he pays himself in Tesla stock. And then what they do, because you can't send your servants to the stores to buy groceries with stock options, they get loans. They borrow money against the value of their stocks, and then they just use that borrowed money to live on. And the interest rates on those loans are generally lower than the rates that their portfolios accrue interest, so their money's actually making them more money than they are paying in interest by borrowing money to live off of from the bank. But it really ends up paying more because they get to write the interest from those loans off. This is where it gets different, because rich people and corporations write shit off. This is where you get the difference between a marginal tax rate, which is the tax bracket that you're in, and effective tax rate, which is the taxes you actually pay. Rich people and corporations, just by the nature of existing, spend a certain amount of money generally in the course of doing business. The cost of keeping the lights on and paying the staff and maintaining equipment. These things are all expenses that can be written off. Obviously, nobody likes paying taxes, so they're going to write off as much as they can. There's lots of ways that wealthy people and corporations avoid taxes, but writing stuff off is one of the big ways that they get that marginal tax bracket that they're in down to the effective tax bracket that they're willing to pay. How much they have to spend to get those write-offs down to that effective tax rate is directly correlated to what that marginal tax rate is that they are in. If you've ever heard a small business owner say, I made too much money this year, I got to go buy a new truck or a new piece of equipment to get the write-off, or I'm gonna have to pay the government a bunch of money? Same exact concept, just apply it to a grander scale than Jim Bob's Pizzeria and Muffler Shop. Imagine you got a company and they make $1 million and say their tax rate is 30%. So let's say their operating expenses over the course of a year was $100,000, so now they're down to $900,000 of taxable income. Now instead of $300,000 in taxes, they're paying $270 for that 30%. Spend another couple $100,000 on new equipment and facility updates, another $50,000 in incidentals and employee bonuses and whatnot, and you're down to a taxable income of $650,000. That 30% would be $195,000 in taxes you owe the government. Sounds like a lot till you remember you made $1 million and now you're paying an effective 19% tax rate on your income. 19% is a pretty reasonable tax rate, and that means that you don't need to spend any more to get any more write-offs, because you can deal with that, and you can just hoard all that money. You can hang on to it. Now, if we make that a 90% tax rate, for any of the write-offs on that $1 million you earned, you would owe the government $900,000. Now, everything unchanged. You have all the same write-offs as under the 30% rate, and you get down to that $650,000 taxable income. So now at that 90% marginal rate, you're still paying $585,000, or a 58.5% effective tax rate on that $1 million earned. So now what are you going to do? You can just give the government their tax money and get nothing for it, which obviously nobody wants to do, so the only other alternative is you hire more people, you raise their wages, you give them bigger Christmas bonuses, you do a bigger match to their 401k, maybe you give them a pension, you give them a little bit better health insurance. Now, it makes more sense to do that than give the money to the government, because higher paid, more motivated, better staffed workforces are more productive for your company, so it's still going to make you more money. But you're not going to stop there. It's a 90% marginal tax rate. You need to pump those write-off numbers up. You update facilities and equipment more often. This means more jobs for the people who make the equipment and the contractors who update the facilities. You donate more to community organizations, and you build things like libraries and performing arts centers. You donate to scholarship funds and research grants so colleges can better educate your future employees and do research on technology that you'll benefit from. You spend more money on research and development to build better, new, more efficient products. This isn't conjecture. This isn't an idea. This isn't theory. This is demonstrable reality and historical fact. We have done this, and it works. People like to pretend that free market competition is the driver of progress and economic prosperity, and that's kind of bullshit. High tax rates that rich people are forced to spend a bunch of money to avoid paying is the driver of progress and economic prosperity. They say necessity is the mother of invention. It's hard to imagine any necessity that is deeper entrenched than rich people's perceived necessity to avoid paying taxes. Taxing the wealthy doesn't necessarily mean that the wealthy are going to pay a bunch more taxes. It just means that they're going to have to reinvest a bunch more money to not pay those higher taxes rather than hoarding all that wealth. Even when they don't pay more in taxes directly, their reinvestment redistributes the nation's wealth more evenly among its people. That means people are making more money, they're spending more money, and where all of that same money was sitting idle in the hands of one person not being taxed, it's now circulating through the economy, getting spent, creating jobs, raising wages. More people making more money means the dwindling middle class can grow by 10 or 20%, back to the size it was in the 1950s when we had a 90% top marginal tax bracket. That means more people who previously didn't make enough money to pay any taxes are now making enough money to pay taxes. Previously hoarded, untaxed money is now being taxed, and that means more revenue, which means more services, and we can provide things like universal health care and free college tuition. The deficit can be reduced. We can invest in our infrastructure. When we say we want to raise taxes, this doesn't mean your taxes. Your taxes will not go up. In fact, if we raise their taxes, we can lower the rest of our taxes. See, all we have to do is take rich people off of welfare, and the vast majority of the United States can make more money and pay less taxes. It really is that simple.